Hello again, everyone. Welcome back. In this technical analysis of the stock market video, I call it extreme compression because that's exactly what's going on. You know where the VIX is sitting. You know we've got a tremendous amount of calm. There's no fear in the market right now. Kind of feels like that calm before a major storm. And we're going to talk about this extreme compression here in just a minute. But we're going to start off. We're going to be focusing on the S&P 500 today. And then we'll move in. We're going to look at one of the key indicators I look at. And then there are four mega cap stocks that are reporting earnings this coming week. We got Google on Tuesday, or Alphabet. I keep calling them Google. I'm sure you do too. On Tuesday, Microsoft on Tuesday, Meta on Wednesday, and Amazon on Thursday. All right, so let's start off here with the side-by-side view of the industrials, the S&P 500 and the NASDAQ 100. The Dow was down 78 points, the first drop for a week in 5 weeks. We had 4 in a row, but down 78 this last week. The S&P 500 was down 4, a little doji type candle in here. And the NASDAQ 100 was down 79. It looks like 3 weeks of consolidation going on here on the NASDAQ 100. All right, let's go back and take a look at the S&P 500 on the daily and weekly view. You could see on Friday it was up 3.73. Not a huge move, pretty tight. And then here's that weekly view again, 4.12 in terms of the move to the downside in here. Now, I'm going to look at the Elliott Wave picture. Here's my preferred count. And this is what I'm talking about when I'm talking about the extreme compression. The range of this week on the S&P, 55.62. Okay, so you'd think, well, how much is this one? 63.29. This is the most compressed week in terms of from high to low, the most compressed in well over a year. Now, what's really interesting about that is, I've seen that the market has a tendency it becomes very compressed, then it goes through major expansion, and then it slowly becomes compressed again. Well, right now, here we've been moving up in this little rally for the last, 2, 4, 6 weeks, and, higher highs each week. And then now we're getting this most compressed week. It's kind of interesting because there's several other things that are possibly lining up in this, but again, you need the price action to break down and roll over. So right now, I still continue to call this intermediate wave 2 at the high here in January. Actually, that was right in the day was Groundhog Day, February 2nd, right here. Okay, so I continue to hold that high. When you draw the trend line below the zigzag pattern, the ABC pattern back up like this, we had the major move down out of it. It looks like we kind of broke out of that corrective pattern. And what we've done now is kind of snap back up and be testing the underneath side of that trend line. So we need the price pattern to roll over and break down. We just haven't gotten it yet. But I think we're very, very close in here. Starting to get some divergence when you look at the RSI. Now, I would like to have seen this above 70, but we're still not confirming the price action of the last couple of weeks here. So that's what's going on there with the Elliott Wave picture. The alternate count, of course, there's always an alternate count. If the market pushes higher in here for whatever reason, and pushes above that February 2nd high, then we've got to move to an alternate that says, okay, intermediate wave 2 isn't quite done yet, and we've got a little bit more to go, and maybe we push all the way up into the August high, the prior 4th wave, within the first intermediate wave down. Okay, so this is the alternate count. Right now, I am staying with this, and I'm looking for this to start to break down and roll over this coming week. Okay, so that's where we sit on the S&P. And then let me take a look at one other thing. Let's take a look at the E-mini futures on the S&P 500. And I'm using the same count in here. Looking at this, again, this trades what, 23 hours out of the day, something like that. I know starts the next day always starts at 5 o'clock Central Time in the afternoon, late in the afternoon, and it goes all the way until 4 o'clock in the afternoon Central Time. So it shuts down for basically an hour. So 23 out of 24 hours, this is trading. And this is the picture I've got. When I look at this, it's the same count that I've got in here. Yes, this has been a very deep retracement, very deep in terms of minute wave 2 as a percent of minute wave 1. But when I drill down and take a look at that move, here's this ABC. This C wave looks like it's complete to me, and it looks like we have an ending diagonal pattern for the small fifth wave sub-minuet in here. Okay, so right now this looks like the ABC has finished, starting to break down out of this channel, but we're going to need more price action. And what I want to see is at a minimum start to take out this low. And what is this? 4098.75 on the futures. And again, this is the continuous picture. Okay, so right now I believe we are on the front month of June, right? Okay, so that is the picture that we've got right now. Same thing that I just talked about, whether we look at the S&P cash or whether we look at the E-mini futures. Okay, let's take a look at, I want to show some of the high lows on the New York. All right, so this is what's going on with the net 52-week highs minus the 52-week lows, plus 36 on Friday. So yes, we've been bouncing around a little bit back above zero, but the key thing in here is that we continue to trend with lower highs, okay, at least so far. And here's that February 2nd high, okay? So we have just not confirmed at all any kind of move to the further movement to the upside in here. And it's even worse on the NASDAQ, okay? So, but we'll stick with the New York for now. Okay, let's take a look at Google, Amazon, Microsoft, and Meta. I'm going to start off with Alphabet or Google, and we'll take a look at it. Okay, here's the weekly view of Alphabet Class A, Google. All right, Google, G-O-L-G-L. Okay, and it was down $3.46 this last week. It looks like the counter trend may still have a little bit more to go. We'll see. Look how much further above that March 2020 low we are. And just as comparison, look at, I'll show you the others that we're going to talk about here in a minute. But this has not come down and attacked that low, at least not yet. At least so far. Let's put it that way. Let's look at the Elliott Wave picture I've got on this. Here's what I think's going on. I believe we had 5 waves down into that October low, and that what we've been doing is counter trend since then, okay? And so now the real question is this intermediate wave 2 done? And, you know, the fact that we pushed 3 weeks, here's last week, the week of April 2nd, we pushed above this early February high. And so I just have a feeling, based on the way I'm looking at this in here, that this may have a little bit more to go to the upside. And if we do, here would be my first target, where Y equals W as a part of a complex, more corrective pattern in here. So this is, when you have a Y versus W, WXY setup, you're connecting 2 corrective patterns, a zigzag, and in this case, another zigzag is what I'm looking at. Could be anything, could be any corrective pattern, but it looks to me like it's a zigzag if it continues to push higher. So that's what we're looking at on Google. We'll see how much further it has to pull back. Wave 2 as a percent of wave 1 in here. We've gone 38.2%. We haven't hit the 50 to 61.8% zone, which would encompass this previous 4th wave in here, but you don't have to. There's no rule that says, oh, wave 2s must go 50%. That's the guideline. It's kind of the target that we have, but honestly, you really have to watch the price action, and you're watching the breakdowns in here in breaking of trend lines and rolling over in the price action. All right, that's Google. Let's take a look at Microsoft next. Now, Microsoft has been even stronger, acting even stronger in terms of being, in terms of the bear move and approaching the March 2020 low. This last week, it was only down 38 cents. And you could see just kind of a consolidation over the last 2 weeks in here. Again, Microsoft has earnings on Tuesday. We have punched up into this high, testing that August high in here, which was 294.18. This, by the way, on all four of these charts, you're going to see this little purple-like type of line. I assume it looks purple to me, but I'm partially colorblind. That's the 200-week moving average I like to have in here just as a reference point. All four of these have either come down to it and come off of them or been oscillating around it. So we'll take a look at that. And then when you look at the Elliott Wave picture, here's what I've got. 5 waves down for intermediate wave 1. And then we've got the counter trend move in here, intermediate wave 2 back to the upside. Now, in Microsoft's case, we've gone fairly deep. We are into that retracement zone that I like to see. We have gone as high as, or very close to, the prior fourth wave of 1 lower degree. Classic, okay? And so now this is ripe for a reversal back to the downside. So that's what we're watching for in here on Microsoft. I'm looking down at my notes. Now, just looking at this point, the correction looks to be over based on what we're seeing and looking for a resumption of the bear move to the downside. Okay, that's Microsoft. Let's take a look at Meta. Okay, Meta Platforms, formerly known as Facebook, has been the weakest of these four, the weakest of these big cap stocks. It got well below that March 2020 low, and it did that down into the bottom in here on October 30th, and then we've seen a nice little counter trend move back up in here. But this is the weekly view. It was down $8.60 here this last week. Let's take a look at the Elliott Wave picture. Here's what I think is going on. Yes, I believe we had 5 waves down. Now you'll notice I'm calling this an A wave. And at this point in time in the bear market, whether we call it an A or whether we call it intermediate wave 1, it really doesn't matter a whole heck of a lot. What's really going to matter is after we resume our move to the downside, what are we getting there? How big, how strong, how does that act? That's what's going to be, I think, part of the key to everything. But the fact that you got 5 waves down tells you that the primary direction of the market is like this. 5 waves always indicates the primary direction of the market, and that 3 waves is the counter trend move, and that's what we have, and that's what's going on right now. And, you know, the corrective patterns, you know, nice simple zigzag 3 wave is the easiest. Corrective patterns could get very, very messy. But right now, this looks like we got a simple zigzag going on with Meta. And so I would look and say, okay, well, here's B versus A. Here's a zone. Could we push a little bit higher? Could we come up into this prior high? Yes. Do we have to? No. We're already pretty overbought in here. The other thing, this is B versus A. I'm sure C versus A in here. Let's take a look at that just for grins. Let's look at C versus A on the zigzag pattern right here. And you could see equality would be up here at 276.73. That's quite a ways higher. But the interesting thing, let me get rid of this noise for a minute. Let me take you to the daily. There's a lot of gaps in here. A lot of gaps. They don't show up on the weekly, but man, okay. Yeah, we push above this March high. Look at this huge gap in here. So it's going to be really interesting to see how much further do we push with this counter trend move, knowing that we're already getting, you know, fairly deep in the move or we will be, even if we get to this level right here. So that's the picture. That's what's going on with Meta. And again, what are we watching for? We're watching for the price action and start rolling over and breaking down in here and breaking trend lines and heading south. All right, so that's Meta. Let's take a look at Amazon. Okay, Amazon has been the second weakest of this big four that we're talking about today, because Meta went below the March 2020 low, and Amazon went right to it, okay, and then bounced off of it. So pretty interesting stuff. Where's that? Well, I don't have the 200-day. Let me go ahead and put it on there. I know I said 200-day, I mean 200-week. Okay, so this is the 200-week moving average here. Simple moving average on Amazon. So you can see considerably a lot weaker than the others. Okay, and let's see. I want to take a look at the Elliott Wave picture. The other thing is, look how the low didn't occur until January 5th. Let me go. I think it was 5th or 3rd. It's the week of January 1st, so the first week of the year in here. That's what I'm counting as 5 ways down for me, intermediate wave 1. So what's interesting about that is we may have significantly more to go up in here to correct this. Could we be done here? Maybe, but I got my doubts, because we didn't even do 38.2% of this 5-wave move down. So Amazon, of these four, which one do I think may have some more upside to go before it resumes the big next leg down, the bear for Amazon? It's this one. I think we got a little more to go in here. You can see where 50% retracement is. The prior 4th wave is all the way up in here. I'm looking down at my notes. 50% retracement will take you to 135. 40 to the top of wave 4 would be 146. All right, so that is the picture here on Amazon. Let me just take a look. I don't have a whole lot more detail on the daily. I'm just looking at the moving averages in here. I mean, you can see it's turned higher. I had a nice big move on Friday, up $3.15. It looks like it wants to run, and we'll see how far it goes. Does it take out this January high right here? I mean, this was a very short, very quick zigzag pattern, but it seems very, very shallow as compared to the entire move down from, back over here. Now you got to remember, I mean, look, the high that we're talking about too, we're not talking about January 1 of 22. We're not talking about November of 21. We're talking July of 21 is the high on Amazon, intra-week high, and then it didn't bottom to January. So one heck of a move, but I do believe it was a 5-wave move down that bottomed here, and so now it's to move back up. 200-week, where is that? That's sitting at about 131 or so. So that's kind of interesting too. Okay, well, that is the picture that we've got on these four, and that's the picture on the market on the S&P 500. We got a lot of compression going on. We'll see what happens this coming week. A lot of earnings coming out. Everyone have a great week. If you felt like the video was helpful, give it a thumbs up. If you're not a subscriber to the channel, hit that little subscriber button. And if you'd like more of this information on a regular basis, head on over to joehenches.net. Check out the website, check out the membership. Everyone have a great week. We'll talk to you on the next video.